Belt and Road is a Chinese initiative to increase and revive trade routes between China and Europe. And as part of this initiative, China has been pushing a number of infrastructure projects along this route. This means that as time goes by, better FX management and better cross-border investment management is required. So how are the parties involved dealing with FX risk? Joining me today to discuss this is Jon Vollemaere, CEO of R5, which provides an electronic and regulated liquidity pool of FX. Thank you very much for joining us.
Thank you.
So I wanted to talk to you a little bit about the Connect service that R5 has launched early this year. It essentially gives access to 8 Chinese banks to the London FX market. And obviously Chinese banks are at the core of the financing of a lot of these Belt and Road projects. So could you tell us why it made sense to launch this service and how this is going to benefit an initiative like the Belt and Road?
Well, there's a number of reasons. Essentially, without getting too technical and jargony, if you're the global foreign exchange market is a bilateral credit market, which means all the banks in the world have to issue a credit line to each other, just like a credit card, and a limit that will deal with each other every day. Anyone who's in an emerging market country, most credit departments within any banks are incredibly conservative and sit there and go, well, no, I don't really necessarily want to extend a credit line to that institution. For China, as other countries, this is a big problem, and it means that they have a very restricted access point into the rest of the world, or no access into the rest of the world's foreign exchange marketplace. So essentially what Connect does is it allows them direct access into the London market by using credit clearing, which is a new model for doing this kind of thing, specifically for the needs of Chinese or Russians or Brazilians or Indonesian banks, or places like that, which is our sort of bread and butter. That's the kind of the basis of it. But of course, China is unlike any other economy. It's massive, and if you're a mid-tier Chinese bank, this allows you to deal right here on the same price that everybody else does, or close enough to it, which is something that they don't have today at all.
You mentioned that obviously China is an enormous market. The banking sector itself is absolutely enormous, and a lot of the local institutions are involved and will be involved more and more in these cross-border infrastructure projects. So are there any plans, and do you see, for instance, more banks joining the Connect service maybe in the next 12 months?
Oh, absolutely, absolutely. I mean, that's my job, is to try and get as many Chinese banks as possible. But there are, and there's a reason why we called it Connect as well. So just like Stock Connect and just like Bond Connect and our friends at HKX, sort of, can we borrow the name, please? Currency Connect, it's exactly the same sort of thing. It's a pipeline in and out of the country. It's highly managed by the PBOC, as it should be. It has controls wrapped around it. And just like those other two, initially it starts, they're very careful with it, very conservative with it, and over time open it up into all sorts of other aspects. And that's exactly the path that we're building out and the path that we're expecting to follow. And even beyond foreign exchange products, so forwards, swaps, commodities, metals, etc., in that cross-border piece of all of that. And the other perhaps interesting thing is that the level of technology around financial markets, and particularly around foreign exchange trading by onshore Chinese banks, is actually quite limited. It is like walking into a dealing room in the 90s. It's very similar in that respect. So it makes it an incredibly captive market. There's this nice greenfield opportunity.
There's a question also of technology transfer that will benefit the Chinese banks as well.
Absolutely.
And I also wanted to ask you lastly about the oil futures contracts that recently have just been launched denominated in renminbi. This is not necessarily linked to the Belt and Road, but it is a parallel trend. We're seeing essentially China playing a bigger and bigger role in these kinds of financial markets. I mean, is that something that you're looking to get involved in? Could it in any way be linked in some way to the developments related to Belt and Road?
I mean, absolutely. I mean, we've had a number of people contact us and talk about it this particular week, actually. It's exciting in the respect that every other commodity in the world is all normally based in US dollars. It's a US dollar market. There's never really been much need for a foreign exchange element to all of that. Oil futures for that particular one based on renminbi means there's a community of futures traders that are now going to need to be able to deliver in renminbi or being paid in renminbi. So for a service like us, of course, that's an exciting new market that's on the back of all of this as a result. Is it Belt and Road? Not necessarily. You know, there are countries along that road that have a lot of oil. I'd say this is probably more political in establishing the renminbi as a bigger and bigger global currency.
And push the internationalization of it, yeah?
The big question will be in 12 months' time, are people still trading it? Or
Exactly,
not?
exactly.
You know, that's the other question on that one.
Exactly. So I guess we'll have to wait and see, but there seems to be a lot of opportunities in FX for fintechs like R5.
Absolutely.
Thank you so much for joining us, Jon.
Thank you.